Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on NA. We like a super simple company and they have cool pictures online.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey, what's up, Johnny? Welcome everybody to the Laughing Stock. Happy Sunday. I know it's a little off day for us, but we're just making up from yesterday. So, cheers.
Cheers, cheers. How are you doing, Dane?
Not bad, not bad. How was the game yesterday?
Oh, it was very exciting. First time in 10 years that the two neighbor cities where I live played each other, and my team was almost winning, but the stupid idiots from the other city scored in the last minute, so it was a bit of a disappointment for me.
Brutal.
Well, that's how it happens.
Yeah, I feel the same way, especially because I mean, we don't watch soccer in the States quite obviously as much as you guys, or football, I guess, internationally. But I do watch hockey, and hockey's the same thing. I feel like you'll go all three periods, and but it seems like in the last 5 minutes they have to give up a goal, and it's like the most frustrating thing in the world.
Yeah, but opposite though, if your team is the one who scores the late, it ended 2-2, so it wasn't a loss, but still.
Yeah, it always drives me nuts though. Sorry, what'd you say?
Huh? No, good atmosphere. It's it was a full stadium, so.
Oh no, I'm sure. When I come visit you, we're going.
Yeah.
So it won't be long. It won't be long after this all pays off.
For sure. Then we will go.
Yeah, it sounds good. But yeah, no, I feel like I always watch like teams in hockey, and like you get ahead, or I mean, I do watch soccer. I watch like the World Cup and whatnot, or football too. I guess I should say football. There's probably more international viewers here than there are Americans. But what do you call it? I feel like a team gets ahead, and then they start to only play defensively. They don't play as aggressively, and then you open up opportunities for the other team to score.
Yeah, that's kind of what happened yesterday as well. They tried to save in the lead, and then it didn't work out in the end. But it's okay. We will take them here in my city when they meet again. We will take them.
There you go.
Yeah,
it'll be that much better.
Yeah.
But
no, so that's we were a bit busy yesterday, so that's why the stream is today, right?
Yeah, which whatever, it's not a big deal. That's fine.
No. So and I think we forgot to post a tweet about it, so apologies for that. But I can see we have some people watching now, so I guess the notifications are working well in YouTube. So nice to have everyone here.
Yeah, welcome everybody. Yeah, sorry. Well, I think both of us thought the other one was putting out the tweet yesterday, so that's why it never got out that we weren't doing the stream yesterday. So sorry if anybody was waiting, because I do feel bad, especially if you're planning time to watch it. But I did put out a warning right now saying that we're live at least now, and we're gonna go over just kind of the same stuff we normally do. We'll cover BNED a little bit. There's not too much to say now. Obviously, it's frustrating that, yes, whatever they finished happened on Friday, but they just have to finish out the filing and put that out, which they do technically have 4 business days post the day, which means it could happen Monday to Thursday. Now, I imagine it probably doesn't take that long to have it all written up, so I imagine we'll get it on Monday. But and it is pertinent information to stockholders, so it is important that they get that out. So I'm sure they'll be working on that. But so, I mean, we'll look around and see if there's anything new. If you guys have any questions in the who are watching, please let us know. We'll try to answer anything. Because like I said, it's kind of down to the wire here. So if you have any last second questions, I mean, who knows? They could put it out even Monday before open. So it might already kind of be too late if you're thinking of hopping in before the news comes out. But who knows? I mean, and for those of you who are probably a little bit less risk adverse and maybe wanted to wait to see some good news and maybe catch it on the upside, just something to keep an eye on, because it could come out Monday morning before open, which, like I said, I think the stock will immediately appreciate from that if it's good news, obviously. But there's still a chance either way,
Yeah. So we will go through if there's been some new comments online from people that have been involved from the beginning here, but I think I checked yesterday and I didn't find so much, but we will still go through it, and we are of course just like everyone else now for weeks actually just waiting for that one news that this week it has to come, right? This coming week.
Yeah, and by the way, everybody, I adjusted my audio too, so if one of us doesn't sound correct, please let me know, because I can adjust something up or down. Just because it always stinks to realize that afterwards. But so I just have the dashboard pulled up. I think everybody knew Friday, kind of post the inflation report, at least here in the States, was pretty bearish. It's making it look like inflation is going to continue to run hot, which is kind of what we were talking about before. We had both kind of agreed that we were surprised they were talking about rate cuts and whatnot. So now I think everyone's starting to price in only 2 rate cuts this year. I don't know. It's like the economy's continuing to do well, where it sounds like, the people on the bottom who are getting crushed by inflation aren't doing well. So I wonder how long that will last, and how long can the consumers continue to spend like they are, at least here in the States. So we'll see. But if inflation continues to run hot, the Fed's not going to cut their numbers. There's no way. So, I mean, I'm not a macro guy, but I also think kind of the writing's a little more obvious, regardless of what they want you to think and tell you. Unless those numbers drastically change, I don't know. But I said the same thing too last time, is, they also don't want to overswing one direction, because I feel like they're going to wait till it starts to crash. Then they'll be like, all right, let's cut rates. But then it's already too late. So.
Yeah. What's the one green you have there? I see one of our new favorites.
It's cocoa. It's always cocoa.
Of course it's all.
So it's almost at 11 now.
Yeah.
We should have just bought cocoa trees. I could have just bought a cocoa farm, and I would have been fine.
Yeah, for sure.
After we start making all these next multi-baggers, we're gonna get some property right in the cocoa region of the world, and we'll just start selling chocolate on the side.
That was the plan from the beginning, right?
Yeah, we didn't want to tell everybody, but that's pretty much where this is going, if you guys haven't noticed. So we're going to be cocoa commodity traders.
And it's just like in our intro videos, we are never too late to the party, right?
No,
it would be perfect timing to do it now.
This is a perfect time to buy at the top.
Yeah.
I'll say that. It's going to go up another 30,000.
Yeah, it could be.
Yeah, I'm just seeing if there's anything else. I see Bitcoin's pulled back a little bit, but nothing crazy. Looks like tech had quite a bit of pullback between AMD and NVIDIA. I saw there was some news on AMD. I think it was that China now is starting to make it where some of their chips they don't want to get from Intel or AMD, because they were big buyers, obviously, of some of the AMD stuff. So that news is relatively bearish for AMD and Intel specifically. NVIDIA is not in the mix, so I imagine it's more on the CPU side, not GPU. But I'm also not a super big expert on all that tech stuff. I just know who produces kind of the basics of what, so that's kind of what I'm thinking on.
Yeah.
But yeah, I mean, it's kind of red all over the place. I think it's just in general, just things are looking a little rough. You know, obviously there's been a little bit of greater tension now in the Middle East, because of now Iran is getting involved in the Israel situation. So that's also like a macro concern, obviously, is if that war expanded, which I think everyone's hoping for that war to come to a quicker end, and it looks like it might not. I don't know. Who knows? We'll see.
Yeah. I saw uranium is down as well, and has pulled back a little bit since it looked very good for quite some time earlier this year. And
Yeah.
solar also, that we have checked out a few solar companies lately. I see solar took a hit also on Friday.
Yeah, I would like to say though, that with uranium, you know, it had this huge pullback here, and it kind of trailed down here for a long time. I mean, like 5 years down in this $10 range. And then I think they had this pretty big pop up between 21 and 22, and then started to shrink back down, but it bounced pretty well off around like the 20, just below $20. It bounced off pretty well back up to 30 now. Honestly, I think uranium's going to continue to push. I think there's been a lot of like bullish catalysts, and like, I don't know, every time I feel like I see news on uranium, it's good news. Like, it's like this reactor is going to be turned on, or this like thing isn't closing, or these people are considering putting more reactors in and stuff like that. So I'm still bullish. I don't own anything that actually gets affected with uranium right now. I've looked at some of the companies, definitely, but I still think that this is an interesting place right now, because it doesn't seem like with all that bullish news that the market necessarily like had too much of a reaction to it. I know it's up, you know, from $10 at 30 now, so it's obviously, you know, a double from there, but I still think there's more room here.
Yeah.
This is a
And
20
you
year
remember
chart.
on the ticker that Barry was involved in, the restaurant, the Korean restaurant, is it how you say it, Gen K or Genk?
I mean, it's a ticker, so who cares?
Yeah. Anyways, that one. Remember this guy Copy was involved, the Praetorian Capital or whatever his fund is named. He's very bullish on, or has been very bullish on, uranium. So if you follow him on Twitter, he has had some good updates on it. All the way he was early, so I think he timed this very well, the upside here in the last months.
Yeah, I think it's one of those things too. It's just kind of been slower moving, but still, it's an interesting commodity to follow. And you know, I'm not going to trade commodities, but I would definitely take interest in the companies that are involved in that. So
yeah.
So we'll see.
By the way,
but,
Dane, we have Josh in the chat here.
Yeah, I just
He's
saw that.
saying, "Hey guys, happy Sunday."
Happy Sunday, Josh. Welcome to Laugh and Stop. Thanks for tuning in.
Nice
yeah,
to
so
see you
today
back,
too,
Josh.
I was telling Johnny that I brought up only a few tickers that I actually was able to screen and find. There was other ones, but it's kind of stuff we've gone over recently, so I didn't want to like delve back into some of the same stuff. And another point too, and I guess we can do it a little bit more. Is normally I don't dive into the 10K and 10Qs on here just because it's a lot of text, and you know, there's just a lot of reading that's going on there, and I don't want the stream to just be me reading a 10K. But Value Hunter had brought up a ticker last time, and he sent me some private notes on things that he had noticed about the company, and without reading really truly through some of those filings, you're not going to see that stuff, and it is important to read the filings. It really is. I just tend to only look at it very rarely because it's not usually that a company falls into my realm where I'm going to actually really dig into it. But he pointed out some good points. So, you know, I do want to start going and maybe possibly looking into some of that stuff, because you do miss things, obviously, without reading it. I mean, you know, BNED, even, for instance, you know, I see we've pulled up posts that people have put down, and I can tell that they've just kind of skimmed over BNED. And if you don't really delve into it, I can see why it doesn't look great. It doesn't look like a great investment, which is why most people probably aren't looking at it, and why it's gotten so mispriced, in my opinion. But so, you know, I think at some point I will try and delve into some more of that kind of stuff, especially like, you know, like today, for instance, if we don't have a ton of tickers to go through, I mean, it's not a big deal to, if we find one we like, to sit there and kind of go through a little bit deeper into these things. And maybe, you know, maybe it'll be good to see people, you know, I don't know where everybody's at in their investing career, but maybe it would be interesting for some people to just kind of see how you should look through a 10K and a 10Q, and just kind of where the highlights will be in that. And then also to know that, you know, there's like a lot of footnotes and stuff. And sometimes, you know, the person who's going to be best versed in a company is the one who really reads all those filings, because it really gives you a good idea. If you've been able to read just like even the last year or two of their filings, you'll have such a better idea of what's going on in that business than the average person. Especially like if you're looking at all the fundamentals on top of all the filings. That's really how, in my opinion, you get, you know, that next step ahead of most investors. Most people don't go that far, which is actually a huge disadvantage, and it's really important to do.
Yeah.
I don't know if you have anything to add to that, Johnny.
No, but I just agree, and the reason you touched on it, like there's sometimes I tend to read straight from documents on the stream a little bit more than you do, I think, Dane, because it helps me to, you know, with the language, it's a bit more better formulated than what I can do myself. So I lean on it a bit more on the streams, but I also try to not read too much on the stream, because it's just boring to listen to me read. So that's one of the reasons that you haven't seen us dive too much into those live. And the other one is like a little bit with the strategy that we have. We move a little bit quick and go through a lot of companies. Then, like for example on BNED, where we take a pretty big position, that's when you maybe see us dive a little bit more into those things. And of course, we do read some of them off the stream, but yeah, maybe we can start to look a little bit more into it on a few of the streams in the future.
Yeah, I was thinking, because like I said, I don't want to always read through stuff, but maybe on some of the ones that I find more interesting, I'll find some of the main highlights that usually it's worth looking through on like a 10K and that kind of stuff. And even possibly looking at some of the more recent 8K filings, just to see if there's anything like small that's changed, but it could be big news. It's a quick filing, and you know, most people, unless you're kind of honed in on that company, you're not really looking at that stuff. So that'll probably be my goal on the stream next, to keep kind of pushing more into that, so you guys can see that side of it, because it really is important. That's really what's gonna all of a sudden make, you know, we rely on Seeking Alpha, because Seeking Alpha is the guys doing that. They're already going through and doing that and kind of giving you their synopsis of it, which is great. But it's really good for you to work on that skill yourself, because, you know, I can read a Seeking Alpha article, and whether I agree or not doesn't really matter. What matters is if the content of that's actually pretty good. And then you can go through and kind of verify what they're saying. You know, that's really the goal with Seeking Alpha. So,
and I found the work we did on the transcripts from the DOE, it's a bit different, but still that was a long read in a short time, and that was very valuable in terms of understanding a little bit more where that was going to end, because it did end the way our gut feeling said after reading those transcripts, and even tuning into the Teams meeting they had, you know.
Yeah, and I didn't do some of the heavy lifting that like BLCM and Private did when it came to the wording on the amendments and the bankruptcy type stuff, and then understanding the IPs a little bit better. And that's more just because that's an area I have to continue to work on. You know, like I learned a lot from looking at BNED, and I'll continue to apply that in the future to other companies. But they also thanked me, saying, well, you know, it was also really helpful for you to continue to focus on the DOE stuff, because it allowed them to continue their confidence that it was worth looking at all that stuff. So, it's nice to know that the entire group of investors here are all kind of bouncing ideas, and regardless of which section that you're taking on and trying to like learn a little bit more on, like everybody benefits from that, regardless of whether it's good or bad. Let's say, for instance, we were watching the DOE and the information looked terrible and it looked like it was gonna be horrible for BNED. That's just as useful, because anybody who's interested, maybe that's your red flag that you need to decide that that's not for you. So it goes both ways.
Yeah. And I mean, in a nutshell, that's also what our stream is trying to do, to create something like that where people can brainstorm and think, together about certain companies and investments.
True. All right, you want to delve into some fundamentals?
Yeah, let's do it. I saw the AZUL ticker, AZUL. My data is a bit screwed up because I have outstanding shares at a 0 in the last year. So I will need to look at your numbers for that one.
I only have 2 years of data. So
okay.
We'll see. And the book value is horribly negative, but this is Brazilian, so I also have to double check just to make sure that that's correct, but we'll figure that out. That's not a big deal. And then I have Weight Watchers pulled up. I had this pulled up from the last stream. This was the only one I didn't get to.
Yeah.
Which, just to quickly go over some basics, Weight Watchers has been struggling a little bit lately. Their stock price tends to bounce around, and that's just kind of the cyclical nature of the weight industry. All those products that are meant for weight loss and to get people exercising and blah, blah, blah. It comes and goes. And right now with all these other drugs out there, right, that are going to fix, weight loss, right now, a lot of people are on those, and there's a big push for them. But, if those last and they don't have a lot of real big side effects going into the future, that's pretty unknown, and it seems like that's constantly an issue, which is why we were interested in the other company, Medifast. If you haven't pulled that or seen that stream, the ticker is MED for that, which is also a company kind of in a similar realm to Weight Watchers. One big negative to Weight Watchers, I know, and you can call this for what it is, but Oprah isn't involved anymore. She's out of it. And you got to think of Oprah as kind of like, the Elon Musk for Weight Watchers, in terms of like, what would Tesla be if Elon said he was like leaving that company? Like it would be a huge hit to the company. Regardless of how much someone actually does for it. It's just that name is such a big brand. So Weight Watchers has really calmed down. If you look at this chart, I mean, it was all the way up to like $12, $13, and this was in October. So, I mean, huge crash, which is just kind of what's put it back on my radar for, I don't know why this isn't loading. Either way, I can't click the other charts for some reason. I don't know what's going on with the website here.
No, but I was going to say that Oprah left them somewhat recently, right? And if you go to the insider information, you can see she has been selling out of that company for a while. Big sales too. I've had them in the tracker.
But is she under an owner? Is that what she's under?
Huh?
No, I'm just trying to find who was talking her ownership at all.
I think you just had it for you need to sort it on all dates on Open Insider, and you will see her name.
Oh, on all dates. I get you.
Yeah.
All right. Well, either way, I mean, if she's sold out of her position, it is what it is.
Yeah.
I'm just going to pull up one of the more recent presentations to see if they've brought anything up about what they're working on now. See, this is one thing, too, that's kind of interesting. So those GLP-1 drugs, which is like Wegovy, and what's the other big one? I forget the name of it. I don't even know if you guys have it over in your countries, but it's one of the diabetic drugs, but everyone's taking it for weight loss instead, which has created some tension for that reason. But these guys are saying, with Weight Watchers, that they're talking about having like clinics as well as GLP-1 programs. So it's kind of mixed. So, they're trying to encourage people that, you can use these weight loss drugs, but in tandem with something that's involved in Weight Watchers, which, it's obviously good to exercise and be healthy on top of if you're just going to try and lose weight, regardless of how you're doing it. Here, I just want to zoom in a little bit here because that's kind of... This isn't really the presentation. This is like a... Well, here, this is interesting. This is for full year 2024 guidance. So revenues are expected to be in the range of 830 to 860, reflecting a 55 million year-over-year headwind from the strategic decision to wind down the company's low-margin consumer product business. So when we go back to the fundamentals here, you will see that in general revenues are down overall, especially from the past few years. But what they're trying to do is improve these margins in here, which obviously in 2023 that didn't really take too much effect. Especially if you compare it to these years. I mean, they were running much better off then. EBITDA is down to 1% here, so they got a long ways to go to get back up to where they were. And they do have a lot of debt on board. They do have cash right now, but as this stuff comes due, that's going to become concerning. Obviously, is making sure that this is all covered.
Yeah, I was gonna say, ask you about the long-term debt there because that's pretty high.
I'll have to look into it and see how much time they have to actually kind of get this in a better situation. There, and then more importantly, operating income is expected to be in the range of 100 to 110 million. Changes to modernize the company's technology organization required the company to update its capitalization labor rate expectations. So based on those expectations, it estimated 9 million of expenses that were previously expected to be capitalized will now be reflected on the income statement in 2024. This shift in operating methodology does not impact cash. So just a little bit because of the change to being a more technological business. What is CapEx been traditionally for these guys?
Pretty similar since 2022, about 40 million, 35 to 40.
Yeah, and I mean they're back. They are definitely back to more on the lower end of that, which is good. You can see that last year they also spent 38 million here, which not that would have changed like too much, but 38 million would have it could have gone a long way to making some of these numbers not quite as ugly.
And they've had a little bit of a dilution in the last year. You should do you have that share issue?
Yes, I do. From 71 to 79. So they obviously raised cash that way. So, but this is the issue is this debt number is still high. So it's going to be tougher and tougher for them to keep pulling on debt. Like people are going to, especially in this interest rate environment.
Yeah. And just to point out also almost a 20% short interest here. And by the way, they have been right so far,
True. I mean, you look at that debt like you were talking about. I mean, that is slightly terrifying as soon as that starts to become due. And it is all actual truly debt, almost 5 billion in debt. So, I mean, that's a lot of debt, and these operating leases and stuff are super small. So it's nothing like that. They really need to work on that. And I mean, you can see, I mean, from 2022, they were positive earnings, and now we're negative. It's not nearly as bad as 2022 was, but they do have a long ways to go. And the other thing too is, a lot of these weight loss companies, I feel like they really benefited during COVID because people were, focusing, when you have a bunch of time on hand, like why not try and do something exercise wise? Everyone's trying to get out because, everyone's cooped up inside. So, we'll have to see where that goes.
Wasn't it a thing with Oprah recently? I don't know if she was already gone from the company then, but wasn't it a thing with her weight loss recently?
In terms of what?
No, that she was like not perfectly honest in her methods or something like that. I just briefly
Oh,
remember I've seen something like that.
I'm not sure. I don't really follow Oprah all that closely, but
I mean,
possibly,
you don't
and
follow up?
I mean, that's the whole weight loss industry. They plaster all these people with six packs and stuff, and it's like, yeah, if I had 8 hours a day to work out and eat perfectly, yeah, anyone can look like that, but that's not realistic for the average person. Most people are just trying to like be a little bit healthier, maybe be like a little bit prouder of how their body looks, or they're just
Yeah.
focusing on in general just their health. But like, that's who this is mostly applying to. So
Yeah.
regardless of what people are showing, but she is a big name. She does draw a lot of people. A lot of people are kind of like cultish in terms of who they follow and trust for information. So that loss of Oprah, that does matter. That's like a strange intangible that's like hard to value. You know what I mean?
Yeah, for sure. What do you have in retained earnings here?
Percentage wise, quite a bit compared to assets. So they
Yeah.
are trying to work on keeping cash, but I mean, truly, the net cash flow though was negative here. So the only reason this number is probably high is because they keep getting rid of assets.
Yeah, they have been selling yearly, right?
Yeah, it looks like it. I mean, assets continue to kind of plummet here, at least in valuation. So I don't know if that's due to like write-offs or whatnot, but if it's all goodwill write-offs too, then that means it's they've been doing poor acquisitions this entire time, overspending on everything. So that's a negative in my mind.
Yeah.
And them offering the equity, that's if they are offering that and getting a ton of money back for it, great. But at some point, that starts to catch up to you. And now that the stock price is way back down below 2, you can't really offer a ton of shares here and expect all that much value out of that without like really heavily diluting.
Yeah. And if you go back to the, if we talk about the insiders again, I see in my set here I have a 3% ownership only, and if you go to open insiders, you see a lot of people have sold completely out. So of course it's getting low in the share price right now. So if you see like a massive insider buy or something like that, that would be interesting here. You know what I mean?
Yeah, I'm actually. I just want to go and see how much the board actually has involved in this. That's how old they are. Don't really care about that. I mean, Weight Watchers does have a name to it too. Like everyone's. I feel like. Have you heard of Weight Watchers?
Yeah, I have, but like because of my stock research, not because of it's so popular here. You know what I mean?
Okay. So
So
this is probably
it's
more a
through the
United States only thing.
yeah.
Sorry, I'm just trying to find if it tells me who actually owes what. So there's also a lot of Oprah got compensated quite a bit too here.
Yeah.
So let's see here. So Oprah still owns a decent amount though. She's still almost a 5% owner. This is from March 8th of 2024.
She's still on 5%.
So there is some still pretty big players in here. But the rest of the board isn't really all that impressive here.
No, it's not. And
So it looks like their big amount due is in 2028. So they do have a long time to kind of figure this out. They do have a revolving credit facility that they haven't touched, but that expires in 2026. But they could renew that to help out with the 2028 and 2029.
Yeah. Those are 2 big years, because that's a big amount on both of these years. Almost $1 billion in 28, and then $500 million in the year after.
Yeah, and the problem is, even if they refinance the 2028, the 2029 comes due, and all those numbers are just going to hurt you as that all kind of comes together. So they have plenty of time to figure things out, but they are well behind what they need.
Yeah.
And like this interest rate here, what was the one? The effective rate is 9.21. On almost $1 billion. That means you're paying $100 million every year in just almost interest. That's a lot of money paid. You know what I mean?
Yeah, for sure. And then when you have the bad or negative story, like in the just the last month, this is really struggling, I think.
I mean, the one thing they can try and do is time their the taxes that they're going to have to get back, because they're obviously going to be losing money, so they can try and offset their earnings if they do have a few good years later on with the taxes lost from here. But I don't know if that'll even be close to enough.
And has there been any management changes or anything like that recently?
I'm not sure. Let me just quick pull up Seeking and just see if they've if anything's mentioned just here on the news side.
Yeah, I did that now. It doesn't say anything, but it says Oprah expected to endorse Weight Watchers Clinic on ABC Special, and that was in March, so I guess she's still involved then. If isn't Dr. Phil good friends with Oprah? If he comes in here now with a big insider, that's bullish.
Yeah. If Dr. Phil. No, actually, I'm just going down the comments, and Value Digger here says, due to the high debt and cash burn, I forecast that Weight Watchers will hardly avoid bankruptcy. So he said Medifast would be a key beneficiary, as a lot of people would probably move over to Medifast from Weight Watchers. Or they could maybe pick it up on the cheap after bankruptcy or something like that. So another interesting part for Med, like I said, they're both in the same business there. So
yeah.
This guy solved all of it. If you guys want to lose weight, just duct tape your mouth. That's what he says. Problem solved.
I see Courage has a comment there too.
Does he? I didn't see it. Where is it?
Like 14th of March.
The 14th of March?
No, I mean, you saw that the value, what was his name? Value Digger in that one?
Yeah.
Just keep scrolling. No, I mean down.
Yeah, I'm going down.
Oh, yeah.
I'm all the way down.
Well, maybe I'm in the top article.
Oh no, I'm still on the one on Oprah.
Oh, okay.
Oh, this is from Wyco?
Yeah.
Yeah, it looks like Oprah tried to just, appear and make the stock bounce, and it looks like no one really has paid too much attention to that. Yeah. Analyze This is another pretty interesting. He usually is a good person to listen to.
Yeah. Courage didn't seem too impressed, I think.
Sounds like these guys are just going back and forth with either way. I don't know. Do you see anything else here? I mean,
No,
it looks
think
like
this
they're
will...
talking very minor stuff, but they're going to need way more than this in order to get this back into a decent spot.
Yeah. And I find it a bit weird that you don't see any changes in management when something like this has happened.
Yeah, I'm actually okay with the valuation that mine's given me, which is about 250. And obviously that 250 is very speculative. Like I think it could be a lot cheaper than that, especially because it's got a negative book value and everything. But just there's a real legacy name to Weight Watchers, which I think has to be somewhat priced in. So this 250, I don't think that's a terrible, but it's not interesting enough for me, even at $1.80, to consider this, because I still think this is going to struggle, even if they hit their numbers like they said next year, which would be obviously one thing, but they have a long ways to go to building up enough cash to handle $1 billion.
Yeah.
I mean, granted, they got 4 years to do it, but it's $1 billion, and you got a tenth of that.
Yeah, that's a lot of work still in those years. But by the way, I have it already in my tracker, so I am keeping an eye on it. But more a bit more because of the story. I added it a while back, so when years back, I think I added it. So.
Oops. Oh, there we go. Yes. No. Same. My valuation's slowly trickling downward, though, which I imagine you'll continue to see that. Part of it, too, is that I feel like they just kind of lose steam with some of these things. You know, like people become less and less interested, and you know, things look tough right now. So I don't know. We'll see what else can happen here, but I'm picturing that they need somewhat short of a miracle here.
Yeah. And that miracle is called Dr. Phil.
Something. Turnaround, poor fundamentals, poor narrative. I'm gonna leave it there.
Yeah, we can move on.
I got around like a mid $1.60 is where it slowly gets into the value range I'm interested in, but still, I don't know. They're going to need some news to come out.
If you also look at the market cap and where it was trading this year, like in the last 52 weeks, there's of course potential here, but the depth, it just scares me too much. Even though the sheet dilute very heavily here, but I need to see something more solid in terms of covering that depth, even if they have some years, like we pointed out.
Yeah, right.
Max is saying hi, Dane.
Max, how are you, man? Welcome to the stream. Good to see you.
It's getting hot in Germany, Max. I'm looking forward to I'm looking forward to the Oktoberfest. What do you have next, Dane? MCFT?
I'm sorry?
MCFT, the boat company?
I was just quickly looking at AZUL here, but I don't...
Oh, yeah.
So they're an airline operator. They kind of cross all over South America. but they do have international routes to both Europe and the United States. But my issue almost immediately, number one, is there's not much data, and so far from what we have, they have a long ways to go with their book value right now to even become worth much here.
Yeah.
Which, even companies like this where I don't have much to go off of, sometimes I just like to peek. I'll just see what the chart looks like, and maybe I'll see if someone on Seeking Alpha has said anything about it. But it's trading quite a bit down from where it was. And my data doesn't go very far back. It looks like, it's been obviously trading since 17, but my data does not go that far. So,
yeah.
Oh, you know what? Actually, it does. I got to change this. Hold on. They file yearly for us.
All right.
I was just going to say, I was like, that doesn't make sense.
No, because I have it there, but my problem is my share count says 0.
I do have a normal share count. They've only added about 5 million shares, and they went from 110 to 115 since 2017-ish. But
okay,
it looks like on average, they just have a long ways to go because of where they're trading in their actual debt load here. The COVID year really, 2020 specifically, really hurt them. But this year, look at their earnings this year. Where did all that? Did they take on a ton of debt or anything this year? Not really. So earnings look good, but the company's in a much worse spot though. Is the problem? They're going to need a lot more better earnings going forward here.
There's a guy on Seeking saying AZUL is still a hold despite the lower price and gold's bankruptcy. So maybe some people are seeing some promising signs, even if it has. It was down 10% on Friday, right?
Yeah, it looks like earnings are coming up, and I guess the whole market's assuming that they're not going to be positive.
What's your thoughts in general about airplane companies?
Typically it's a terrible business,
Yeah.
This is why Buffett and some of those guys have always said that, it's really hard to get in, and anytime he does, he kind of gets burned. The problem is you're always competing with everybody, and it depends on your country too, though. Like certain countries, they spend a lot to make sure that their like international airport is really successful, but it's just tough because you're trying to provide flights to sometimes where there's not a lot of need for them, and you're trying to keep stuff as cheap as possible, but as gas and everything ticks up, it becomes more and more difficult to actually afford everything that you're doing.
Yeah.
And there's an argument.
I remember
sorry, what?
No, I was just gonna say the oil fund that we have. They have a podcast and a YouTube channel, and in one of the episodes there, he talked with the Ryanair, which is a Irish airplane company here in Europe. And the Ryanair CEO, he was I don't remember 100% correct here probably, but he said something along the lines that he expected in the future that I think it was in Europe, you're only gonna end with 4 airline companies. Like they will all eat each other, and you will just end with a few ones.
Yeah, I think it doesn't make any sense to have a bunch of no matter what, it's going to kind of monopolize, because if you think about it, airports only are covering so much area. It's the same thing with like railways or something like that. Like you first off, you have to have an airport. You have to have space at the airport for these different companies, which, only so many people can fit in there to have their different terminals. And then on top of it, you need to make flights that are going to be advantageous for people actually traveling. Like, where do people really actually travel back and forth from? So just kind of the nature of the business is it kind of gets narrowed down into just a few companies who are going to best benefit in that market, or at least be able to like survive in it. And then, but for it to be like a really profitable business, it's not. It's always just going to kind of just get along because people are only going to spend what they can. You know what I mean?
Yeah, yeah. And you know, what was it, Malaysia Airlines or something like that, when they had like a bit of a lot of bad luck, and they had issues with 2 airplanes in a short time, and then
Just look
it
at
didn't
Boeing.
survive, you know. Yeah, yeah.
Yeah. No, there's that. And then the other thing too is what was I just thinking? Oh, ever since COVID too, I feel like so many people are working remote now that like the whole I'm gonna fly to this city to have like an office meeting, you know, like that's insane.
Yeah.
Like you can do a meeting for free over Teams. Why would you fly a bunch of people like across like a country or internationally even to go meet in some office to talk about the same thing they could have done remotely? Like, you know what I mean? Like that whole business is essentially gone.
Yeah.
Every once in a while, sure, you want to actually meet up, but like just needing to do that need isn't always there anymore.
No, it has changed.
Max is saying when you would start a sheet from the beginning, what sheets would you start with? And then do you see any advantage in using something like MS Access Database?
All right. Yeah, which sheet did you start with, Dane? I think I started with my fundamentals, because if I don't get my fundamental sheet, if I didn't know that I could build the fundamental sheets, the rest is kind of a bit irrelevant.
Yeah, I actually did mine kind of backwards then from you. I started more with my dashboard, and the reason why I started with the dashboard is because I wanted to make sure that I had an accurate way of pulling all the information in from Share Radar. So the first thing that I did, Max, is I built this. There's a few tabs here. So this is my master ticker list tab, and this is where every company I pull in that Share Radar has, and I kind of crop this data using some macros. So I'm trying to get only the stuff that's like the top companies that are still alive. You know, I wanted to eliminate, because the data they have is on companies that are dead and stuff that's gone bankrupt. So like, obviously I don't care about that, or stuff that used to have a ticker, but now it's merged or the name's changed. So like, I wanted to cut all that out, because when I first pull this in, there's like 50,000 that come in. And I think I got it down to around just over 8,000 or something like that. So I cut out a lot of it and I trim it here. And then from there, I have the listed tickers where I have the tickers come in, and then I have it pull in a bunch of fundamental data about it. And all this stuff here is calculated and used to populate my dashboard. So when you see like my dailies here, all this information comes from that. So that's how this all gets pulled in. And then you'll see like I have these like ratio tabs and stuff down here. That's just so I could pull in the more recent information for these. And all that stuff gets added. That's where this all gets pulled from. So I pull the tickers into here, and then under these different ratio tabs, that's where I pull in all these for the different companies. Then this just conglomerates it into one page essentially. And then from there, my dashboard pulls all that in so I can see that data. So the reason I started with that is I wanted to make sure I had like a good screening tool, and that I had all the information that I would need, and I could do this in an actual way. Because once I had that up, the fundamental tab is really kind of basic. You know, obviously it pulls in a lot of information here, and I have, you know, my tickers here. These just this page here, it just pulls in the very few tickers or whatever I have that's check marked from my dashboard. So anytime I click something here, it will then go into my fundamentals, and it will pull up in this list. And this list is what populates into my different tabs on for the fundamental page. And then you'll see there's always a copy. So like I have my C1 here, and I have F1 here. F1 will be the ticker as well as like the information for the past years. It will pull everything in essentially. And then this all information just gets translated into this, and I chop it and divide it. Like you can see when I click data down here, it goes down, and this is where like I've pulled in the data and I get it organized in a way that this sheet can use it properly. So I mean, there is a lot to get it working, but then you know it's nothing too crazy that I'm doing. And then the last thing I built out obviously was my database one, and that just sends the ticker into here, and then from here it populates whatever information that I want, as well as all my little notes and stuff I can put in. So then that way it's there for me. And I'm not sure exactly what MS Access database is, but how it works on here is like when I have like this ticker, for instance, here, and you see it has this little stock, like this little building right here, that just means that I told Excel to turn that into and pull out ticker information. So like when I click on this here, you'll see it says like the percent change. It just says, hey, this is a ticker. Show me what the percent change is. So I can use this to pull anything on that company in that's not already in one of the other spots. And then they all work together. So everything's pulling from one another. So it's just kind of a mix like that's how it all works.
Yeah, good.
Is that similar to how yours works, Johnny? I know yours probably. I mean, it's you just find a way that works for you. It doesn't matter. You can do it a million different ways.
Yeah, it is similar in many ways, but because of our data providers, I think we have done it a little bit different. And like I said, I started with the fundamentals first, with the free version of Y sheets, where you could just pull in from like Apple and like the big companies, Tesla. So I just spent a lot of time testing out if I could actually pull in all the data, like you said, and then I figured out a way, and then I started with this one, and then I think the next one I created was the dashboard, like you, and then I worked a lot to create my daily movers. That probably took the daily movers were probably the hardest one that I built, and then I needed to build out a tracker sheet as well, where I spent a lot of time creating the button that you have seen in my streams, which is entirely a script. And you can find that tutorial on YouTube if you're interested. So I didn't come up with that. I just followed the tutorial. But I think the main part where with everything you said just now, Dane, is that in the end, all these sheets are connected in many ways, and that's the key, I think. And we have talked about it before. Also, you need to understand how everything is connected, and like you said, if you find a way to build it in the way that it works for you, you will also understand where it pulls in everything that you need. So yeah.
And we probably said this before somewhere, but the other thing too is like as you build stuff out, you'll find stuff that's useful and stuff that's not useful. And and like I said, I knew the way RK had built out his, I wanted to use that because I liked the way he had built it and it made sense to me. And I knew if I could build something similar to it, at least, that it would push me in the right direction to be able to do kind of my own investments and feel confident in my numbers and what I'm pulling in, which was my whole goal initially, was just to make sure I had my own platform. Because as soon as the stream went away for him, then I was like, all right, well, if I want to continue to do this, I gotta do it myself. So that's why I got into building out the spreadsheets my own anyways, because I was ready to try and tackle this on my own. But, I might build out like a tab, and then I'm like, you know what, like this doesn't really work how I wanted it to. So I just get rid of it. Like I used to have it in my dashboard. My watch list used to be at the end here. But then once I made this database tab and I could just do my watch list here. Sorry, that's like so zoomed in. But to me, I'm like, why not just have it over here? I can automatically pull my tickers in, and all I have to do is in my database, if I put a WL in my notes, it tells it to go to the watch list. And that way I don't have to sit there and try and move things around and send them to all these different places. So I don't know, you just like learn little things that keep making it easier, and then eventually it just kind of works, and you at least
a big thing that I have spent a lot of time improving stuff is more automation, and just easy to use. But also I've had to go through a lot of times trying to cut out things and do things in different ways because of the sheet performance. It gets very messy very quickly if you use Google Sheets, and if you kind of use these big formulas, or you're pulling in things from websites and stuff, it can only handle a little bit. So that's probably the most like, to make it simple and strip it down to the only thing that you actually really need, and know what to prioritize, and then try to improve the sheet performance all the time. That's probably what I'm spending the most time on now these days.
Yeah, I agree. And Max, that's another thing too, is like, the more you start to build these kind of things, and the more you learn about like coding and logic, you'll realize like, the first time I tried to build something, I build it in a way, and then afterwards I'm like, you're an idiot. You could have done that this way, and it would have been 10 times easier, and you would have saved all this work. But then, but that's just part of the learning curve. And all of a sudden you're like, okay, well, in the future, anytime I build something like that, I'll just do it just like this. And then it's so much easier. If I was to build this from scratch now, like if, say I just deleted everything and had to rebuild it myself, I could probably in like, I don't know, maybe like a month kind of get it close to back to where it was. Obviously, I would lose my database and all that, which would suck because that's where I keep all my notes. But just if I had to straight rebuild this from scratch, now initially though, it took me over a year. I mean, it definitely took me about a year to really start to hone it and get it how I wanted it. But you just kind of have to accept that. And in that time when I was investing and whatnot, I just kind of the nice thing was, if you're serious about investing, this just got more and more exciting, because every day that I would be able to take some time and spend out building out on this, I would get this next step done, and all of a sudden my investment stuff made a little bit more sense, and I had a little bit more information, or like I could get to something a little bit quicker than I could before. And then before you know it, it's up and running, and you're using it just like a program, so
yeah.
Because initially, you can use all the other websites and stuff, but it is tough. You don't have access to all the little things, and when you have questions, and it's all expensive. I mean, I pay for a few different services, and I'm fortunate enough to be able to afford those. But if I had to just use some of the websites and stuff that only give you so much information, it's tough. I think it's tough to get as much information as I want to really be confident in my picks.
Yeah, I agree. And that's and by the way, I've said this before on one of the streams, that I'm a little bit in touch with the founder of Y Sheets, and to try to get him on a stream and talk about how he built up Y Sheets and stuff like that. So maybe we can make that happen, and he can talk a little bit about how one of these data providers are thinking, because I think a great part of Dane and myself here is that we have attacked this from two different approaches, and they end up pretty similar.
Right. No, definitely.
So there are other ways to do it than what the RK did as well.
Yeah, and Max, you're talking about using MS Access. I when you first said MS Access database, that threw me off because I hadn't heard it called that. But yeah, I haven't really played around with Access too much, but it sounds like it's the more, there's even more that you can do with Access. It kind of involves Excel in a way, but it's just another kind of program that they have. So I don't know. I don't, Excel was enough for what I needed, but maybe Access is even better, and you could find more uses for that. I just currently don't use Access. I could, but I don't. Excel works just enough for me. And also too, in terms of like, Johnny was saying that, sometimes he's got to be careful because he does all his stuff online. Well, the good thing about mine is I'm not relying on my internet connection, because it's not online, it's on the computer. But then it matters, are you on a decent computer or not? So like, my spreadsheets work great on my computer, and I bought a nice laptop, so my laptop's really fast and it's snappy with it. But I've noticed if I've gone on a different computer and tried pulling all this stuff up, it does not work nearly as well. So
no,
you have to just kind of learn to work with what you got.
Yeah.
But words of wisdom right there.
Yeah. But thanks for the question, Max.
Yeah.
And in terms of like the biggest advantage for like which sheet is the biggest advantage, I think that's very hard to say just because like we just said that they are all connected, so you kind of need the whole system for this to work.
Yeah, and and which one would you start with? I mean, with whatever makes sense to you. Whatever's most pressing. Like, are you trying to find companies? Are you trying to really look at the fundamentals? Because similar to what Johnny said, like, you can start in one of those areas and pick out what makes sense to you. So if you're just looking at it because you just want the fundamentals on companies, start building that one first, and then later you can start to build out like some kind of screening dashboard and stuff where you can keep track of stuff, and then build out your database later so like you can see the companies you've looked at. Or maybe you don't even want to do any of that and you just want a database. Maybe you're happy using like Finviz and Yahoo Finance and that kind of stuff. You could just build a database one, and then that way at least you can keep track of what you've looked at.
Yeah.
So it's all what you want it to do. I use stock charts, but hell, if you wanted to get wild, you can pull in not through Share Radar. There's another service I know that you can pay for on NASDAQ Data Link. And they'll send you literally all the prices, and you could build your own charts and do all kinds of you can find anything you want. So it's all out there. It's just what you want to use it for and what you want to build out.
Yeah. And by the way, it's good to come here and ask questions about the sheets, but there are like Discord communities and Google even have their own communities and stuff like that. There's a lot of people that are willing to answer you on any questions you have about building this. So there are channels out there, that I got a lot of help from.
So Max is asking, is it possible to see the daily movers for a specific date with your sheets? For instance, if you couldn't research the day before yesterday, could you access the daily movers for this date? So how mine works is I can't go back, but as long as I refresh it once on that day or after it's closed, I get that information in, and then I just keep what I want of it. So for instance, when we go to my dashboard here, when I just go to my main thing here, if I click refresh all here, it'll refresh everything, including like my daily movers. It'll do some of my different HTMLs, which I'm pulling from other websites, as well as my insiders, which is pulled from Open Insider. So with these movers, if I want, when I can tell it to post over this. And then in here, I actually have to manually update it by clicking convert here. So if I want, I can pull in a few days at a time, and basically it will just keep stacking the data. The only manual part I have to do is when I'm done with a day, I just have to like basically copy and move everything up so that it appears in this spreadsheet correctly. But every time I post it, it posts it in the next line down. So I could post Monday, Tuesday, Wednesday. And like I said, so as long as on mine as I refresh it once a day, I'll have that day's data. And that's why I usually do it at 3 days a week. I don't do it every day. Sometimes I miss it. It's whatever. It's not the end of the world. But that way I kind of keep a continued list. Because sometimes it's too much. It's too much to do it every day for me. I don't have time to look at it every day. But if I can do it 2 or 3 times a week, I'm happy with that. And then, like I said, it's my choice if I want to keep something that's older or delete it. So as long as, like I said, I'm refreshing it. I mean, I could have stuff going back as far as I wanted. This page here just pulls in based on wherever it is on my where is it? My movers list here. So like this is my these are my daily movers in terms of gainers. So this Indo company here will pop up in my dashboard right here at the top line there. So it will pull in up to, I don't know how many tickers I allow in here. I think maybe 250 I have it set at. So, and before, and then it will drop down to my losers, because my losers are just at the bottom there. Sorry, my computer's still scrolling because I was just clicking that really quickly. But anyways, so I can pull up to that many. So it's just kind of up to me what I want to pull in and what I want to keep. So that's how I do it.
Yeah. I've actually been thinking about this question too, Max, for a long time, and I've tried to think of ways to try to automate it. I haven't come up with a solution, but it would be very useful if you, like Dane said, it's hard to do this every day like we are doing. So sometimes you're gonna miss things in the daily movers. But that's also a bit why we have the weekly movers tab, where you kind of collect everything that has moved a lot in a week. So that's a bit helpful when you come to the end of the week, and maybe if I missed a day also, I can see what has been moving a lot so far this week. Let's say I miss Monday, and I can check the weekly movers already on a Tuesday, and maybe I can catch something there that I missed on Monday. But yeah, no, it's a good question, and I've tried to find a solution, but I haven't been able to figure something out yet.
Yeah, and like I said too, usually I have too much content to go through, so I'm actually okay. I kind of like having just a few manual stops on things where when I update it, it doesn't automatically update everything, because sometimes I don't want it to update stuff. So yeah, I don't know. I'm sure I could figure out a way to where I could have it. I'd probably have to make another spreadsheet so I could really store like a ton of information if I wanted, where it would store, up to like a month. Like I could have it where it just keeps storing up to like 30 days. And then somewhere in here, I would just have to say, find day 1 of the month, and then that would pull it into here. You could do that theoretically really easily. So you would just have to have like, you could set like this and make like a drop down box and say, hey, when this says number 1, I want you to pull in March 1st, and it will pull in all the tickers from March 1st from another spreadsheet. You could set it up like that. I just don't need to. It's already a lot of information. Like I said, I'm not trying to bog down the computer any more than I need. And it is, the other thing too is, because everything in investing is time sensitive, like I don't want information to I don't want myself to fall behind. So if I allowed myself to just store weeks on weeks of information, well, in my mind then I'm like, oh, I know I got it, so like what's the rush to look at it right now? Well, the rush is there could be big news that just came out, and like if you don't catch that, you just miss the opportunity. So I want to stay on top of it as much as possible. I don't want stuff to pass me and notice it weeks later or months later. Granted, sometimes it happens. It is what it is. But as much as I can stay on top of it and have it as in real time as possible, that's what's super important to me. So the way I have it working right now works good for me. It's kind of everything I need. It's not too fast or too slow. So I just kind of stick with that for now.
Yeah. I think though, in terms of daily movers, there are some websites also you can use and set up preferences on what to look for, and you can get pretty close to the sheets that we have, I think.
Yeah, and I use I believe investing.com for mine.
Yeah.
And
so,
there you can set the price movement, the percent change, how much the market you can set all kinds of variables. So then that way, every time it uploads it, it's that more specific list that I'm looking for. Because I know, Johnny, you say you pull out all the biotechs and stuff so they don't appear, correct?
Yeah, that's correct. And I had to do that through multiple filters because I do it by the description, and it search for certain words and then just keeps them out of the movers.
Yeah. So which is, I mean, that's awesome. So either way, there's a lot of different ways you can do it, but I hope some of that helps you, Max, because I know just being able to kind of see the whole thing, because trust me, I had to build it in all parts and just kind of come up with the ideas as it went. Granted, I had RK, obviously. I saw how he did it. So, but you didn't have him going through like we are right now, showing you I did this, then I did this, then I did this. Like that would have been super helpful to me. I had to figure that all out on my own. So yeah, if you do have any more questions too, I'm happy to help, because I know what a pain in the ass it is to just try and do it from scratch. But
yeah, no, for sure. And I mean, there's a reason that we have a sheet with the daily mover. So even if you have the website, we understand that it's convenient to have it in the sheet and connect everything. So of course, it's better if you can find a way in the sheet, I think. Max is saying, yes, thank you. At the moment, I'm screening in TradingView, but if I miss a day, there is no historical screen possible. Yeah. No,
Yeah.
it could be a problem that.
Yeah, and yeah, there's days I miss things too, and I assume, Max, that if something is actually as big of something as, because the other thing too is we're looking for pretty outsized returns. So it's super rare that something I find the next day is going to be up 300%. You know what I mean? Like, it's just not going to happen. I'm not in
Yeah.
biotechs where you really see those big moves. So for instance, something like BNED that's interesting to me, I'm going to see that for a few months before something happens where it's super interesting to me. Like Alto or GTE or some of these other names we're involved in. You have plenty of time to get into these things and learn about them. And it should pop up on like one of my different forms of screening in some way. At some point, I should be able to see it. Usually they kind of drop for a while. That's usually where it starts to interest me, because it just keeps dropping and dropping. And then because of the valuation side, it starts to get really cheap, even though things look grim. And then that's where I'm going to start to really dig in, because now it's got the margin of safety I'm looking for. And now I just have to find, what's going to turn this around. What is everybody else missing that this company's doing to get out of that tough spot?
Yeah. Yeah, a lot of those that we are involved in and that we add to the watch list and the tracker sheets, before they go a lot up, they go a lot down. So you always have time to average down and stuff like that, and just track it. You don't even need to take a position. Just follow the price action, and if you have done the fundamental work and read up on it, you can figure out a price point on your own where it starts to get interesting to actually take a position. But a lot of the process is tracking, and then you always, not always, but you usually get you get to see them go way down before it goes up again, I think.
Right.
At least that's in my experience on the companies that we have been involved in.
And then and a few other things too, like when I pull up my just my internet here, you'll see I have funds listed. I have some of the analysts I follow, and occasionally I'll just check to see what those guys are talking about, see what other people have bought, because that can throw me ideas that maybe didn't pop into my screeners. As well as too, sometimes on stock charts, I have it all organized by what's it called, by the industries. So like, hell, if I think chemicals, maybe I've seen like a company looks interesting, I can go in here under chemicals and I have everything listed, and then I think it's gallery view, no, chart list view. I can just pull up a chart list view, and then I can just look and see, does anything look like it's down right now? Is there any interesting charts? So there's a lot of different ways to screen. And I mean, I could sit here all day looking at charts. There's always something you might find in when you're delving through that. So, and there's so many opportunities too. Like if I miss a few opportunities, there's another 50 to look at. So it's, it just is what it is. And every time I miss an opportunity, I see a company that's way up. Sometimes I'll look at that one because I want to know what I missed. Like what could I have seen that other people saw? Where if something's up 60% one day, well, what happened that caused that to go up 60%? Was there something I could have caught? Because if so, then I start to pay attention. I'll add it to my database, so then I know in the future to look for that. Blah blah. Yeah,
you've heard us say many times on the streams that maybe we're a bit too late already, and that doesn't necessarily mean that it will not continue to go up. But we want to be in, at a much lower level. So then it's good to see if you have missed something and why you are potentially a bit late, and then try to just learn from that in the next one. But that's not easy though. That's very hard because every situation is unique. But in terms of screening and following other people, Dane, we have a ticker today actually that has caught our attention because of some people that we follow on X, EVC.
Yeah, let me get EVC uploaded here.
X is a way of screening as well.
Yeah, sometimes there's a ticker that like I said, I follow all different kind of analysts, and if someone starts talking about something that's interesting, I might look into it just on that.
Yeah.
Or really good insider buying. Sometimes I'll see a company that like I've never heard of and things don't look too great, but I'll see like a massive insider buy and like, okay, well that's obviously something worth looking at.
Yeah, for sure.
All right. So I have looked at one before, but I think it's been a while. Entravision Communication Corporation is a global advertising solution media and tech company, and its segments are digital, television, audio. Operator primarily located in Europe and Latin America, actually all over the place. I don't know why it's saying even that when it's everywhere. Its television and audio operations reach and engage U.S. Hispanics in the United States. It owns and or operates 49 primary television stations. They comprise the affiliate group of both Univision television networks and Televisia Univision's Unimas network. So obviously a bunch of like Latin America, but it's like Spanish channels here in the States. So for anybody who speaks Spanish, which a big chunk of the United States first language is Spanish. I'm actually always kind of dumbfounded that the United States hasn't adopted Spanish as a second language here, just because so many people speak Spanish here. But either way,
yeah.
It also owns and operates Spanish language radio stations in the United States. So, it's communications, but specifically for Spanish speaking individuals.
If you go straight into the chart there, then you will see a massive drop in March, and it has something to do with the Meta.
Oh, I wonder if I looked at this when Meta was going on. I feel like I remember seeing this news or something.
Yeah.
And Kingdom's the one that's saying it's an unjustified sell-off.
Yeah, that article is also recent, I think.
This is April 10th. So yeah, very, very recent.
Yeah.
Yeah, I did see that they were talking about I don't know if it was because you pointed out to me, but I saw something quick talking about that this year is, maybe I saw this on X. Is that where you said you saw this?
Yeah, I saw it on when Kingdom on X said that he has written an article. That's how it caught my eye, and then I saw Courage is also involved, I think.
Yeah, I think they were just the comment that I remember them saying is because it's an election year, there's a lot of revenue that are generated from advertisements for that. So they'd be obviously a direct beneficial this year from that. So I'm just trying to get caught up here on some of this stuff. And he's saying to look at it on a 4-year time basis because in those election years is when they really generate a lot of extra cash.
Yeah. That gets me a bit excited that you got that drop in an election year.
Yeah, right. It could be that something unmaterial affects this when it's one of their best years usually.
Yeah. He's saying the company appears to manage very carefully towards cash generation through the cycle, and 2024 should be a large upcycle in spending across EVC's targeted audience.
Yeah, he's actually comparing it to Great Television here too.
Yeah, GTN.
What is their actual leverage? Oh, see, it's not
I
bad.
get-
See, he's talking because that's one of the things that attracted you and I to great television is the fact that it's so leveraged. It looks kind of ugly because of that leverage, but these guys are not that
Yeah.
levered.
No, they are not. But they have. Oh no, I looked at wrong. No, they are not at all, and they have even. What they have in cash? 100 million, about 100 million in excess cash.
Yeah, just about. So obviously they're covered right now, and I have to know what those are. Is those like contracts and stuff? Because I imagine it's not like they have like a ton of money, like in like retail space and stuff like that.
Yeah, no.
And they're positive on a free cash flow basis. And they've had some
CEO
solid
has-
years for earnings. This year's. And the other thing too is so they lost that Meta contract. So I want to know what is that going to do to revenues?
Yeah. But interesting though, in March of this year, the CEO bought shares.
Yeah, I did see there was insider.
So that was when the drop happened, you know.
So he owns 1.4 million, and how many shares outstanding? There's 88. I mean, that's still a significant amount.
Yeah.
Trying to get back to here. This is usually where I like to start my articles, is go right to the risk section. Said, while the Spectrum holdings at EVC have value, they need another FCC broadcast incentive auction to monetize it. It remains to be seen if or when this could happen. An FCC auction authorization expired in 2023 and is yet to be renewed. I expect a few years before this can realistically occur. EVC lost contracts on their DC, Tampa, Orlando stations at the end of 2021 from Univision. If they lose their remaining TV deal at the 2026, the TV segment earnings will suffer. TV and radio media properties are not growing industries, so they have kind of like the macro headwinds working against them. And obviously we'll still have to see. I mean, this was the whole GameStop argument too, is that, you know, like it was a legacy business and everything was moving online and that it wasn't going to survive. And, you know, what they were arguing is just simply that it wasn't going to go away as quickly as everyone was saying it was. And just the short interest reflected like as if it was going to be dead like tomorrow. So it'll be interesting. Did you see what the short interest is on this?
No, it's yeah, I saw it about 5%. So
Of float?
yeah, I think so. I can check on Wall Street Journal.
Yeah, I got
Percentage of
5.6
float.
on Yahoo.
Yeah, 4.71 they have here.
Just something to consider.
Yeah. Yeah. I wonder though, do they have want to see their stock how do you say it, like the structure of it? Because I think maybe they have different classes of stocks.
Sorry, what was the last thing you said?
I think they have different classes of stocks.
Oh, okay. Yeah, that's important to know. Like preferred or just different like voting rights?
Yeah, I'm checking now. No, they don't. It just said Class A common stock, so that's all I can find at least.
So what he's saying is that his whole premise is just, even though Meta's contract's lost, that where it's trading right now, it's undervalued in terms of what the business should be generating. So
Yeah.
and I do have it's discounted. I have 330 for my and that's not including the dividend. So you could easily argue this is worth $4 right now.
Yeah.
EVC. I don't know, just on that quick evaluation, that's interesting.
Courage saying he loaded up in the 150s on March 20th. And he has a similar thesis to Kingdom here. I like this one.
Kind of need to turn around. Oh yeah, I want to throw that they're paying a dividend now. Or they were paying a dividend. I don't think I marked that last time I looked at them, but...
Yeah, no, they do.
Well, I mean, he picked a great time to get in there. At $1.50, this was stupidly tradingly cheap.
Yeah. Again, show you the importance of tracking.
Yeah, and when did I think I literally looked at it right before. It must have either been when it first dropped or right before it, because I think I looked at it like I'll have to look at it on the stream because I just updated when I looked at it, but I think it was right before that news, maybe, based on what I had here.
Yeah.
But either way. All right. Well, I mean, I agree, and just on a relative valuation, like he's talking, if you compare it to GTN or he said iHeartMedia, which is radio, which they do radio and TV, so I guess it's somewhat comparable. It's much cheaper compared to those.
Yeah.
I wanted to just look at what the debt looks like here. Yes, about 200 million is the actual debt amount. And that doesn't even mature until 2028. Up until that, it's only 10 million each year. So they're fine.
Yeah, they are fine there.
You know, and if they're just paying just the interest amount and the principal maturity, they'll be at like 170 by 2028. So what are they right now? So they're definitely going to need to generate some cash here, but you could easily argue that the assets they control, they could easily sell some of that off to make up and cover that debt.
Yeah. Sorry, I was just writing a lot. I'm adding it to my tracker. But once again, I find it attractive at 2, but you know, way more attractive after that drop. So might be a bit too late here even already. But I just want to have it in the tracker.
Just seeing if they had anything that's worth value that they don't necessarily talk about. They have some land and whatnot, but who knows what that's actually going to be worth.
That they could sell off, you mean?
Yeah, I'm just looking if they list anything that seems like an obvious thing they could sell off. I mean, obviously they have the different TV stations and stuff like that, so that's all obviously worth different amounts. And I think he commented a little bit on that in the article. Or I saw someone in the comments had put where was it here? The CFO said 1 to 2 years ago that SMA Dex or whatever, how it's Smatics or whatever it is worth more than 100 million alone. Only digital asset they ever bought, they paid off. They wrote off 200 million in radio assets over the last 15 years. So if the company is going to sell those assets off at a time when they could probably get decent money for it, he's probably arguing that that needs to be done sooner than later.
Yeah.
And I mean, the fact that they do pay a 20-cent dividend per year isn't bad, especially down here. I mean, that's a 10% dividend at $2.
Yeah. Oh, this was a interesting one, I think.
Yeah, I could easily see this argued being worth 3 something from here.
Yeah, and you see on Friday, I mean, it was down 5%. So.
Yeah, I'm gonna bump it a little bit on my confidence scale up just because of that dividend and I have like a very small amount of cash that I have left, and I wasn't gonna throw it into anything, but now I'm like, oh, this one is interesting. I mean, obviously I'm gonna. It would have been interesting more if I caught this at the bottom too.
Yeah.
Like around $1.50, I would have been like, okay, this is really cheap, because from there it's a double. Yeah. Like I agree. I think it could still be worth like $3. I think it could be worth $4 with a dividend. You could argue it's worth $4.
Yeah, no, I agree that even at the entry here, I would still be interested, but it's just a bit painful that fairly recently it was substantially lower.
Yeah, this would have been a good one to catch on that drop. I feel like I don't know if I looked at it or not.
No, but to be honest, I was thinking like, because this has guaranteed showed up in the daily movers at some point, but you know, we have talked about it actually, that we have seen a lot of these broadcasters and media companies a lot in the daily movers, and they tend to be somewhat at least a little bit similar in the fundamentals that we are checking out, and I'm starting to think that I just ignored it based on that, which was probably stupid then.
Right. Well,
it's no, but it just shows you that like it just spending 1 minute on something can be worth it, you know.
Yeah, and yeah, but you also have to do a little bit of your own legwork too. Like when you look through something, you really have to try and put the story together in your head.
Yeah.
Do you have anything else you wanted to add for this?
No, I've already added in tracker, and my notes were like the things we have gone through. So.
What did you find out about the different classes of stock?
Oh no, nothing. I saw on the quarterly report they had like a class U shares, but I didn't find anything there.
I just pulled up the yeah, they have U, B, and A. So I'm sure it's the only difference. So no B shares are authorized. They have A and U. So some of them are voting shares, the other are not. But they should probably trade very similarly.
Yeah.
So it shouldn't matter all that much. I mean, you know, I don't know how much voting rights matter in a company like this. You could argue whatever the difference is probably already priced in. But if I look for EVC, can you even see the different No, so they might all be considered the same, even though there's the different classes. Because that says 80 million shares outstanding. Implied shares outstanding is 103 million. And this says 80. And then there's the extra 10 there. So they must have some kind of convertible or something. Or stock-based compensation.
Yeah.
They're restricted stock units. So yeah, they have all kinds of different stuff going on in terms of their units. So whatever, it doesn't matter.
No, I don't think that matters too much, that the structure there.
I mean, I won't say it's not something to think about, but it's not, especially trading at this price. I'm not really worried about it.
Yeah. And Kingdom didn't mention anything about that, right? Did he in the article?
Not really.
No.
I will say I like Kingdom's when he writes. I feel like he kind of gets very right directed to the point.
Yeah. Yeah, no, it's good, and he's about the numbers like he should be, right?
Yeah, but he always does kind of put enough of a story to it that like the number, because sometimes I feel like people just post numbers and I'm like, oh, okay,
Oh yeah,
like
no.
doesn't really tell me what's going on here.
No, for sure. He ties it together with the story, and
Right.
obviously you have seen us talk about him in the stream before. This is one of the guys we follow closely. Which, by the way, he's not totally sold on BNED.
No. Which I understand why if you're not.
Yeah.
And if you didn't, if you feel like you can't value something properly and you don't want to take the risk on, I get it.
Yeah. Yeah, I think he had a hold rating, so he wasn't on his last article.
Yeah.
Yeah, no, interesting, this one.
No, that was a good one to pull up.
Yeah.
And the only other one that I had in my actual list here was Mastercraft. And the only reason I was pulling this one back up, because I know we've looked at this on the stream. I think you and I both have.
Yeah, we have.
I just saw there's another insider buy. So Coliseum spent another 10% here. So now their ownership is at 4.4, which there's 17 million shares. So that's quite a bit.
Yeah. Have you heard about them?
Coliseum?
Yeah.
I feel like I have seen. I feel like they own someone else I was interested in. Well, I just want to see what their actual holdings are.
Yeah, I have them here. They don't own a lot, so...
I mean, they tend to own pretty, like, strong names. But, I mean, some of these are... I mean, Purple, the Couch Company, Lazy Day, Holdings. What is Gore V? I feel like I've looked at that before. I think I just looked at that not that long ago. So they're definitely in value. Their biggest is Gildane, the t-shirt company. So
and they have them as number 8 in their holdings.
Right.
Out of 12.
And I think my argument with Mastercraft is it's a pretty good business. It cyclically, I don't know how well they're doing right now, just because it's more of like on the nicer side for boats, And that's a pretty expensive purchase. Obviously, people aren't buying boats very often. Not to say people aren't buying them in general, but you know, you only buy a boat. You're not buying multiple boats. That most of us aren't.
Yeah.
So, but the numbers look good for this past few years.
They
They're buying
do, and
shares back too.
yeah, bit less in revenue, but they have cash there and full control of the debt. It seems
Yeah, but you say a bit less in revenues too. But if you look at just on like a 3-month average or a 3-year average,
it's all,
like 2022 was a really good year for them. 2023 is their second best year, so it's not even like it's like a bad. You know what I mean? Like, yes, it's less than they sold in 2022, but not like bad.
yeah, no, true. And also, we have checked them before. Like, the product seems to be popular, but like you were saying, maybe a bit slower in the sales now. And the premium models that they had, if I remember correctly, was they didn't expect them to do so well in the. I think they even came with some guidance on the entire year of 2024. That was a bit lower. But I added this one to my tracker in August, and I think the share price has only gone up less than 1% since then. So it hasn't moved a lot, which made the insider buys, because they have been buying 2 times, right?
Yeah.
Since August.
I think that was my biggest thing too. Is like the upside here for me is limited.
Yeah.
I think if you were gonna hold this for a long time, I think this is a pretty decent looking business. Because, you know, I picture, you know, out like if you look at like 5 years or so. Where are we at here? Let me just look at these and crunch some numbers real quick.
It's also a bit interesting.
In a few years, this being worth a good amount.
When it comes to that Coliseum, the insider in 2023, in the beginning of the year, they actually sold a lot of shares, and then they have bought back at a much lower price. So they have some history here too.
Yeah, last time I calculated that they would be worth like around 27, and I was interested around $18. So my thing is, I'm just kind of looking for a pullback on this one.
Yeah, I actually also have them at interesting at 18. But like I said, it has never gone down or up a lot since we saw it.
Are they doing share buybacks? Is that what's going on here?
Oh, there's a new CEO in March.
Yeah, I just saw. I
So
just pulled that up.
Yeah.
I think I read this transcript before. Last time we pulled this up. Yeah, it says we expect to continue to allocate most of our free cash flow for the year to our EPS accredited share repurchase program.
Yeah, they said on the news section, like a Mastercraft Bowl launches new 50 million stock buyback, and that was in July.
Yeah, and I mean, they don't really have a ton of shares outstanding. I mean, you know, in comparison to some of the other companies and whatnot. So, and with the stock price at like $20, I don't know how much you're going to be able to buy back for. I don't know. Would you argue that I think I'd rather see a dividend in this case?
Yeah, maybe.
I guess either way. There's probably, if you probably did the math, it's probably not much better to do one versus the other. It's just trading. It's not trading like super cheap, which is where I would like to see them buy back shares more. You know what I mean?
Yeah.
But they don't have a ton of debt, so it's not really concerning. I mean, they're just using their free cash flow. No matter what, they're sending it back to shareholders. So, I mean, that's huge.
Yeah.
I don't know. I like them.
I also like them. They are already in the tracker, and if they reaches like 18, it's very interesting, I think.
I think I might add them to my my other portfolio where I have like more longer hold investments.
Yeah.
Because they're not quite cheap enough where I want to buy them in this portfolio, but
It reminds me a bit of, and when I say remind me, it's like just a few things, not similar in many ways, but the story with Jack's Toy Company or whatever the full name is.
yeah, just JKK.
Yeah, it took a long time before you saw any movements, but then all of a sudden you got a pretty quick double there, I think, from when I added it to the tracker. So, and then you also had a industry expert buying a ton of shares. So there are some similarities with that.
Yeah, and I'm just looking at the comments on the most recent article here for Mastercraft. And this gentleman, he's kind of saying what I do. He said he bought MPX because of MBUU, Mastercraft, and MPX, which are all boat companies. He said he bought MPX mostly because of the decent dividend. And he's like, all three should recover in time. They always do. So it's a cyclical business. And he's just saying right now, like he'd rather have the cash handed back to him, which is kind of what I was just thinking with this. Don't get me wrong. I'm happy with share buybacks. I just think it's a little expensive right now to me to do share buybacks for a company at this stage. I think I would rather them focus on dividends.
Yeah. No, but this is one I have been following, and for some reason my data with the insiders didn't show anything. So I've actually followed them and not paid attention to the insiders, but
yeah, that happens.
It's meaningful.
Yeah, that'll happen to you, Max. You'll have everything all set up, you'll still miss something.
Yeah.
or it'll glitch out on you, it'll drive you nuts. That happens.
Yeah. Dane, I think I need to call it for today.
Yeah, I'm getting to the end here too, sadly.
Yeah.
But
some good tickers though.
Yeah, no, I was even though we didn't go through a ton today, but I think that's more I guess some days it'd probably be like this anyways, where it'll be less tickers, but we can probably delve it, like I said, start trying to pull up a little bit more in depth on some of these things, like with this, start with the transcripts, and then maybe go back and look at 10Qs and 10Ks on some of these ones.
Yeah.
And I always recommend anybody who's watching the stream too, if you ever hear what we're talking about and something really interests you, like the next best step is always to go into the recent filings and figure out really what's going on in the business and what the future outlook is. So that's really the name of the game anyways.
Yeah.
All right. Yeah, I'm out of beer. I've been out of beer for a half hour. So.
Never a good sign.
Nah. All right, everybody. Well, I hope everyone has a good rest of your weekend. We'll cheers tomorrow when we get our news on BNED, because they have to put it out tomorrow.
Come on.
They should. They really should be putting it out. Because at this point, like I said, they do have technically till Thursday, but I imagine we'll have the news relatively soon, because they probably just have to get it all written up now that they finalized it on Friday. So we'll see. We'll see what comes of it.
Yeah. Exciting. Another exciting week that we are looking forward to in the BNED saga.
Yeah,
I feel like we have said that a couple of times. Yeah.
And then, like I said,
all right,
too,
thanks everyone.
If BNED starts to appreciate, I'll probably take out some from it just so I can start to add to some of these other positions I'm interested in. And that's not because I'm not happy to hold BNED, because I do plan on holding BNED for a long time. But I would like to free up some capital just because I'm kind of overly extended into BNED, and if it goes up, it'll become an even larger portion of my portfolio here. So just to de-risk on a portfolio management side, I might move some stuff out of it into something else just to move stuff around. But Another thing I didn't really get to talk about today is if anyone's invested in ARK, the United States just put out this big news article on how they're going to spend like over $1 billion to try and get the PFAs out of our water, which is a huge bullish for ARK. So even though ARK's up massively, it's up 200% or whatever it is, I still think that's going to climb. So if you're been invested in ARK or interested, I mean, if you're invested, you probably know that news. But another bullish catalyst for that company. So things have still been looking great.
Yeah.
All right, man. Well, have a good rest of your day, and I'll be on Tuesday, correct? Or am I back to normal time? Or?
Yeah.
All right,
Back to normal times.
I will update everybody Tuesday. Hopefully, we have our BNED news by then, so we can delve into that more.
Yeah.
And then we'll continue on from there.
Yeah, and make sure you follow us on X, because we update there if some changes in the streaming schedule, like it was this week. And I mean, if some news comes out on Wednesday, for example, maybe you will see some change in the schedule or something like that. So, but for now, we think that we're going to do Tuesday, Thursday, and Saturday for this coming week. So we're going to be back to our normal schedule.
Right.
All right.
Have a good one, everybody.
Bye-bye.